I think the approach to investing in the Southeast and growing a business, and this will sound bad to start with, but it's actually this sort of measured, disciplined approach. And why that's so important for an entrepreneur, I think it's obvious for an investor, but I'll touch on that in a second. Why that's really important for an entrepreneur is that it takes time to figure out how your solution is going to work, what your go-to-market motions are, what your ideal customer profile is. You may have to refine your product to really work on your product market fit. And so having some capital with these proof points allows you to take on capital so that you're giving up less of your company early on. And then as your company creates value through time, there's a belief in an ecosystem here where you can follow on and follow on and follow on. So you end up having multiple investments through time. Whereas in other ecosystems, that kind of innovation hubs specifically, it's more of a massive investment, right? And as an extreme, we'll say it's an idea on a napkin and you've done it before, so here's $20 million or whatever the case may be. The downside of that, it's great because then you have $20 million, and if you're disciplined with that cash, you can do a lot of things. The downside with that is that if you don't get to a scalable model that gets past that valuation when the money runs out, it's really hard to fund your business again. And so I think what's attractive in the Southeast is that both entrepreneur and investor ecosystem are kind of on this same page of, let's really focus on the unit economics early. Let's focus on the value, and let's focus on that product market fit, and let's inch our way towards that through time. And you may do 5 rounds in the same amount of time that someone else would do 1 round. Your probability of success will go up, and the amount of capital that the entrepreneur retains will also be higher, right? Because you're raising at all these rounds where the business is valued at a higher business. And so I think, there's an attractive kind of, as that being the backbone, you have, cost of living, you have access to customers. If you're selling in the B2B space, there's just a massive amount that are focused here in the South, or that are headquartered here in the Southeast. So there's all these other things around it. There's a great talent network. There's tons of universities and colleges that are pushing out young talent. There's a lot of experienced talent that's coming out of these Fortune 500, Fortune 100 companies. So I think you have all the pieces and parts that come together. I think when people sign up for that investment model, right, where there's this sort of focus on unit economics and kind of how the business is going to scale through time, and you think about these as milestones as we invest along the way, that becomes a really attractive opportunity for entrepreneurs, really in almost any industry. And I think that's what's so exciting about the Southeast. A couple of years ago, we wrote about how you could see the Southeast sort of shifting momentum slightly behind the rest of the kind of big traditional hubs. I think that persists, right? We still see this. It sounds bad, but it's slow, right? We're able, because of the way we invest in the Southeast, we're able to see these trends. We're able to see them out on the horizon and adjust behavior. And so any violent swings that we're seeing in the larger hubs where there's more capital being deployed are still swings in the Southeast, but they're muted. They're more muted because we can adjust before we run into the bright light that's coming our way. But one thing that's really interesting now, and I alluded to this before, is that the trend of us moving up continues to be seen in terms of post-money valuation and deal size. There's this concentration of capital that's going into these slightly later stage companies. I think that's really interesting because there was a period in kind of 2020 through 2022 where so much capital had flooded into the market that anyone who was investing in the Southeast was essentially pushed down market, right? Where they used to be able to operate, there's suddenly all these new entrants in the space that may or may not have any reason or right to be there, but they're moving capital around. So it kind of pushed everybody down. And we had this increase in the amount of deals that were being done in the seed stage, right? Suddenly stuff that used to be in mid maturity or even late stage, suddenly was doing all the seed stage stuff. And that pressure has been released. It takes a little while to normalize, but you can really see it in the report this year, this shift back to a balance in the Southeast of us doing seed stage, kind of mid stage, and now really even growing that late stage environment. That to me is an interesting development, but also kind of an exciting one. And we're now able to fund our own companies in the Southeast much longer, not relying on kind of outside capital from the ecosystem.